Welcome back. Well, we also have Mayuresh Joshi of Angel Broking joining in the conversation this afternoon. Mayuresh, just want to get your thoughts in on Ujjivan. If you saw the stock today, there seems to be some concern around farm loan waiver, Karnataka polls, etc. What would your advice be on this stock now?
Afternoon, Surbhi. No, it's again, I was hearing the management on some other business channel, and they clearly categorically defined the exposure specifically towards crop loans to be around 1.52% of their overall advances. Now, what this means is that even if the farm loan waivers come through, I think that should, if the management considers this to be 1.5%, should be a very negligible effect in terms of the hit that they take. But again, that gets compensated largely with a lag. But coming to core fundamentals, they have shown drastic improvement. Obviously, I think the operating expenses that started coming through with branch expansion, staff costs, probably played out against them in terms of credit costs staying at elevated levels around 9% which they have got down very, very drastically to 1.5 or 1.6%. Even in terms of the provision coverage, they've actually got the provision coverage to around 77-78%. And even if one looks at GNPAs, even they have come down drastically. And the collection disbursements, both these prominent features probably are playing out for them significantly well. So largely, again, I think there should be improvement in the dynamics. But again, I think Equitas is something that I still continue to prefer over.
Okay, fair enough. Deepak, your thoughts on a stock like Krish? Thoughts from you as well, finally, on a couple of these stocks which made a big move, GAIL and Oil India?
No, so I think good moves on this one, but ultimately I think the belief here is how crude probably behaves and incrementally what is the sensitivity to the earnings profile if it stays at elevated levels. So you have to pick and choose at this point of time, and any two stocks that I probably like within the mid-cap universe can be something like a GIC Housing, where our belief is that the numbers were extremely strong. The bank borrowing has come down significantly below 50%. So that safeguards the cost of funds. They're chasing high yield assets and asset quality pressures are coming off of what we've witnessed in FY17. 24% loan growth is how we foresee over the next couple of years, and a price to adjusted book on FY20 is reasonably cheap. And the other one probably is a music broadcast. Expectations of an 18% growth that they've delivered over the last 4 years can get repeated. The bottom line has grown even significantly higher compared to its competitor ENIL. And when you're probably talking about a large part of their capex on 39 licenses already over, maintenance capex of 5 to 10 odd crores, the free cash flow should be significantly higher with good advertising revenues expected to come through the next few quarters, election season around, over the next few quarters and months as well. And that should provide support to the earnings profile and even higher dividends in our opinion. So I think a couple of stocks to choose: GIC Housing and Music Broadcast.
Okay. All right, gentlemen. Thank you very much for being with us this Monday afternoon and taking us through market close.